Hello everyone again, welcome to this new supply and demand analysis for the 1st of February 2021. This is the trading disclaimer. You can pause the video and read it at any time. Okay, let's start with the dollar index. As explained in previous analysis, we've got the monthly area of demand in control going short over there. Not allowed. We're expecting a big retracement. Will that happen? We don't know. But we are having new areas of demand being created. Now the dailies are out of alignment. Also, the weekly area of demand, strong area of demand, is in control. So no shorts are allowed. We need a bigger retracement to the weekly areas of demand, supply, in order to go short. And then we will have to evaluate what is going on the monthly, because if we have a super strong rally, this is going to be like a bullish engulfing pattern, like around there. You can see how I am connecting this, how the monthly and the weekly are connected or interconnected. So the crosshair over there, it would be a monthly bullish engulfing pattern against a weekly area supply, which scores low. So far, only longs possible. On the euro dollar, we have the same scenario, but upside down with the monthly area of supply in control. Weekly area of supply is in control. Price action on the weekly is a bit of a mess. And the daily right now is out of alignment. One of you, I think it was Anwar, pointed out this trend line that I missed. Because this price action here in the middle, this is a rally and a drop. It's not a pause. So the trend line is broken. That's the area of demand, poor area of demand, and prices is ranging between these two imbalances. Very poor price action, both on the daily and on the weekly. Doing nothing right now. On the Aussie dollar, we've got almost all the Aussie cross pairs doing more or less the same. Very strong rally, monthly average demand, losing steam in the monthly. Weekly average demand is over there in control, but it's not scoring high, it's not a 2-to-1 imbalance. So we need confirmation for longs. Strong average demand, not this one, which is only 1 year C. So monthly uptrend, weekly uptrend, daily out of alignment, longs are weekly average demand. So if the area of demand on the weekly scores low, we need confirmation or longs lower. On the Aussie CAD, we were expecting this weak area of supply to be eliminated. It just didn't happen. Monthly in an uptrend, weekly in an uptrend, longs will be possible there again because the daily is out of alignment. So realignment rules, monthly up, weekly up, daily out of alignment. That's the daily, let's say. So we need weekly imbalances. And that's over there. On the Aussie Yen, we've got the monthly in an uptrend, monthly supply is in control, no longs allowed. The daily is already out of alignment, bouncing between these two imbalances. Weekly demand over there, we need that area of demand in control and new areas of demand. On the Aussie Kiwi, we've got the monthly area of demand in control. We need new areas of demand on the daily in order to go long, and that is not happening. As explained in previous analysis, this weekly bullish impulse did not consolidate away. So even though it was responsible for eliminating this area of supply, as expected, because this area of supply was right in the middle, against the area of demand. So when prices rallies over here, eliminates the weekly area of supply as expected. So longs would have been possible down there, no retracement. And now the daily is out of alignment with poor area of demand eliminated, poor area of demand about to be eliminated, and a new area of supply for shorts on the way down. On the CAD Yen, we have the monthly area of supply. This is weak supply, expecting price to penetrate the level deeper. Weekly area demand in control, new area demand. The daily is a little bit of a mess. Supply created, eliminated, demand created, eliminated. Both of them score, well, this one scored high, but it was against the bullish impulses on the weekly and all that. This one over here, daily, only 1 ERC, not 2 to 1. It is about to be eliminated, and if that happens, an aggressive area will be created there. So longs aggressively into monthly area of supply. On the Euro Aussie, month is in a downtrend, weekly is in a downtrend, price trying to reach that weekly area of supply. We have the daily area of alignment with daily area of demand almost in control, bullish engulfing patterns, price pushing higher. Confirmation for shorts. Longs on the way up with the daily out of alignment. So we've got daily out of alignment needed for counter trend on the weekly sequence. So weekly sequence, weekly down, short bias, weekly bullish engulfing pattern telling us, hey, the bearish move is over. Price is rallying higher. Then the middle time frame gets out of alignment. We get a new area of demand on the daily, new areas of demand on the 4 hour. Middle time frame out of alignment, longs and areas of demand, 4 hour area of demand already in control. Long bias on the way up. Counter trend, remember. EuroCAD, well, this one is a tricky scenario because we have the monthly average supply in control, and then we have now the weekly average demand in control, creating areas of demand by scoring low. So, doing nothing. Euro Pound, monthly bearish pink candles, classic resistance, weekly downtrend, weak area of supply, only 1 ERC, not 2 to 1, poor price action on the Euro Pound. So doing absolutely nothing, waiting, and waiting. On the Yen, long bias, monthly is in an uptrend, weekly is in an uptrend. Since the daily was out of alignment, we were waiting for price to retrace to the weekly area of demand, where longs would have been possible again, but it did not retrace. Probably there is a 20 EMA confluence over there. Let me see. There it is, 20 EMA confluence. Longs and areas of demand, we've got the areas of demand. Euro-NOK, monthly area of demand in control, longs if new areas of demand are created on the daily. This daily area of demand was created, but it doesn't score high. So longs if new areas of demand are created. Scoring high, high probability, high score. Euro Kiwi, monthly area of demand is in control, longs and areas of demand on the daily. The trend line is not broken yet, so we need new areas of demand on the daily in order to go long. Going short is not allowed. Pound dollar, month is in an uptrend, weekly is in an uptrend, demand is in control, daily area of demand being created and respected, brand new area of demand on the 4 hour with bullish confluences trying to play out. Pound Aussie, we've got the bearish impulse not able to consolidate away. We have a monthly downtrend, but nothing to go short at, set and forget. Weekly area of alignment with the weekly area of demand being in control. New area of demand created after trend line broke. New area of demand on the daily. Areas of demand on the 4 hour. Taking control. Long bias on the way up. But it is a tricky scenario. Pound CAD. Well, classic resistance again. So every single time price reached those price areas, price on the weekly, the candlestick, did not manage to close above that. So this could become another of those pins and a retracement. So price will drop down there, the same thing happened. So going long right now, it's very aggressive. Even though we have a daily area over there with 2 ERCs, 2 to 1, but we also have a daily area of supply tested but in control. Very, very tricky. Pound yen, expecting the elimination of that weekly area of supply. Deeper penetration in the monthly area of supply is happening, as expected and mentioned many times. We've got the 3 months area of demand in control, 6 months area of demand in control, longs and new weekly areas of demand. One being created over here. If this one Well, this one was already eliminated, but we need consolidation away. One more candle. Long bias. Pound Kiwi. Monthly area of demand in control, very similar scenario on the Euro Kiwi with the monthly area of demand in control. So look at the price action on the weekly. Really poor. It is at balance. Bearish and bullish impulses are not able to consolidate away. What to do? Nothing. I mean, obviously you can go to the lower time frames and try to go long and near demand and all that, but it's a very tricky scenario. That's an area of demand because there was a peak here, there, trend line broken, near demand. Kiwi dollar, month is in an uptrend, losing steam at the end of January, which already happened. This is analysis for the 1st of February. Today is the 30th January 2021, but the markets are closed. Tomorrow is Sunday, markets are closed, so the next time the daily candle opens will be the first daily candle of February 2021. Expecting a bigger retracement. Weekly area is supply. Weekly supply zone is in control. Bullish engulfing patterns, bearish engulfing pattern, price at balance. The strongest imbalance is down there at the monthly and the weekly. The daily is already out of alignment, so longs not allowed right now, even though that daily area demand is in control. Kiwi CAD. Hopefully we'll have that area of supply eliminated. It's not happening yet. The month is pausing. We could have a new ERC created next February 2021, but it is not happening because we have that bearish engulfing pattern and the daily area supply is in control. So if this is eliminated, then longs and EF's demand, that one down there, could trade wider. The daily area of demand with the monthly aggressive area of demand against weak area of supply on the monthly. Kiwi yen, month is in an uptrend, week is in an uptrend, bullish confluences, longs and EF's demand, new one being created here in the daily. Dollar CAD with the dollar index potential bullish rallies. It's a rally, bullish. Potential rallies, because we have the monthly and the weekly average of demand being in control. Maybe we are going to have, well, we already have the 3 months area of demand in control. Potential area of demand could be created on the weekly if the trend line is broken and all that, and we get a couple of ERCs consolidating away from the trend line, and we would have the support of the 3 months area of demand because the weekly time frame is the entry time frame for the 3 month sequence. So far, we've got the daily area alignment with the daily area of demand being in control. Swiss franc versus the dollar. After a very strong bearish impulse, we need a bigger retracement. Weekly is at balance. We will see this price action almost on most of the dollar cross pairs for counter trend. Chinese yuan versus the dollar keeps on dropping, unable to reach the monthly area of demand like it happened on the dollar index and on Singapore dollar. Weekly overextension, compression, longs and near demand, and there's a lot of margin for profit because if this area of demand gains control and the new demand zones are created or the bulls gain control, then price is going to easily rally all the way up to the origin of the move. Indian rupee versus the dollar, we have the weekly area of demand in control, weak daily area of demand, longs if new strong areas of demand are created. That is not happening. The strongest imbalance is down there on the monthly, with the monthly and the 3 months in an uptrend. Dollar yen, long bias. Why? Because we have the monthly area of demand being in control. If we take a look at the euro dollar, we're going to have very similar scenario. Okay, monthly area of demand, hit that area and then rally all the way up. Now, when we take a look at the dollar yen, we've got the same scenario. hit the area, and now we have a bullish engulfing pattern, so going short here. No way, my friend. Bearish impulse, not able to consolidate away, monthly area of demand being in control, and new areas of demand being created for longs, with the monthly area of demand being in control. On Norwegian krone versus the dollar, the monthly is in a downtrend after eliminating two areas of demand, but the weekly is overextended. Balance, bullish impulses, not able to create two ERCs and all that. It's a very tricky scenario right now, waiting and waiting, because the NOK, Norwegian krone, is getting stronger, and the dollar is getting also stronger, so there is no correlation. Singapore dollar versus the dollar, monthly average demand is in control, weekly at balance, longs and new areas of demand. So right now, waiting for new strong areas of demand to be created. On South African rand versus the dollar, we have long bias, monthly uptrend, monthly area demand was reached. That's what we are waiting on Chinese yuan versus the dollar, but it didn't happen yet. It's a pity that it did not retrace to the area of demand daily, like I mentioned in the previous analysis. On the Eurozone, which is a highly correlated cross pair to this one, it only changes the currency on the left side. This is the dollar, and now we're going to take a look at the Eurozone, which has a very strong area demand that took control, and that's a valid entry over there on the daily, as explained, because we had a 20 MA confluence over there, monthly in an uptrend, and the weekly area demand in control, and it's trying to play out. But on the on US dollar versus the South African rand, we didn't have price retracing to that strong area of demand on the daily. It didn't retrace either to that area of demand. And now the indexes, we are having a bearish correction right now. It might extend a few more weeks. I just can't tell you for sure, obviously. But we're going to see price action, and you're going to see why I'm saying this. All-time highs broken, new average demand on the monthly in an uptrend. Weekly average demand is poor, so we can't go long, set and forget. This daily average demand only scored low because it only had one ERC, was tested, eliminated. So we need new average demand in order to go long. It doesn't look like there's nothing happening anytime soon, because we have the daily average demand eliminated, this one under attack, the 4 hour in a downtrend. Longs, there, higher probability. On Nasdaq, very similar scenario. We've got bad price action here on the weekly, no consolidation away. We are waiting for new areas of demand to be created. This cannot be set and forget. Monthly area demand over there, very similar to the S&P area demand. On Dow Jones, same thing, monthly uptrend, longs on monthly area demand. This is very bad price action. No longs allowed. Set and forget. It's not possible. Daily area demand, only one ERC, not 2 to 1, no set and forget. This one scores high, but then the daily was already out of alignment. If the daily is out of alignment with a daily area demand eliminated, then we need weekly average demand in order to go long. And this is not weekly area demand. And it wouldn't be scoring high. Okay, well, it is a weekly area demand, okay, because it consolidated away, but it doesn't score high, so no set and forget. And the same thing happened on DAX. Bad area of demand on the DAX, daily area demand was tested, daily out of alignment. This area of demand is being tested, expecting bigger penetration. Long requires new areas of demand. On Russell, overextension. On the weekly, daily, very bad price action. After that strong rally, we need a bigger retracement confirmation for longs. FTSE, no set and forget longs. Why? As explained in the previous analysis, weekly is in an uptrend, but weekly demand does not score high, only one ERC. We need 2 ERCs. We've got a bearish pink candle, shooting star, going long, no way, waiting. Nikkei, monthly uptrend, monthly is losing steam, longs at monthly areas of demand. This is an aggressive type of trade on the weekly, waiting for confirmation. After the strong rally and seeing the monthly losing steam. On the Australian index, we've got the monthly area supply in control. We're expecting the elimination of that, but it is not happening yet, creating new areas of supply. Longs and new areas of demand after a bigger retracement. Hang Seng, strong rally, monthly is in an uptrend with the 6 months area of demand being in control. It's trying to lose a little bit of steam. We've got a bearish engulfing pattern, longs at weekly and monthly areas of demand. On the Nifty index, Nifty 50, Indian index, longs and monthly area demand. These weekly area demands in control, but we've got overextension, so no longs over there. This pink candle over there is dodgy, not good for set and forget. And we have overextension, longs and monthly areas of demand. Bank Nifty ended up eliminating that monthly area supply as expected. All-time highs broken, no close above, very strong rally, expecting bigger retracement. Confirmation for longs at this weekly area of demand. Counter trend shorts on 10-year notes, as explained in previous analysis. Longs will be possible again at monthly and 3 months areas of demand. Previous daily areas of supply, counter trend played out. Those two, no retracement yet. Bitcoin, very strong rally. Longs and monthly average demand on the monthly sequence. On the weekly, longs could be possible on the weekly. Over there, I'm going to eliminate that one over there. The weekly, the daily is got the daily average demand being in control, a brand new average demand on the 4 hour, but this is very aggressive. Longs after a bigger retracement. Gold doing nothing. Bullish engulfing pattern, but price action on the daily is very poor. The weekly is in the downtrend with the weekly area supply being in control, doing nothing, waiting. Natural gas, it did not retrace the weekly average demand where longs will be possible again. We have 6 months, 12 months, 3 months, monthly average demand being in control, long bias. Brent, the last one on the list, trying to reach the 3 months area and the nested monthly area supply, where shorts could be possible again. Right now, we've got the weekly area of supply in control, no longs allowed. We need a bigger retracement for longs or shorts if we start getting near to supply, if price reaches the monthly and the 3 months areas of supply. And I believe that's everything for this week. Enjoy the rest of the day. Be happy. Stay safe. Bye-bye.